Hello Wolfpack, this is an extremely important Bitcoin update here. We've got options expiry happening on the 17th of June, $3.3 billion worth of options in USD value expiring. In January, we had a similar expiry of 3.2 billion just the day before that happening. So that's on the 17th of June. The day before that happening, on the 16th of June, we have interest rates potentially hiking in the United States of America. We're going to look into that a bit more extensively in a second. We also have a couple of new charts to look at. We have some more compression charts to look at. We have a specific date point in which Bitcoin will be making a move by, and we have the 9-week long downtrend on the weekly chart in terms of candle closes ending for the first time here on Bitcoin. We've just seen a green candle, an inverted hammer candle. On top of all of this, we've got a 6-month long bullish descending wedge formation while the 4-year cycle is indicating a bear market. Lots to unpack. Extremely massive amount of content to unpack today. But before we get into that, I want to talk about Wolves Crypto VIP. If you're not part of the VIP membership, go ahead, click the join button below. You get access to altcoin trading signals, a 2-hour video on market psychology, and the WOC Weekly newsletter, which dissects everything that's happening in the market on a critical basis. In a short, concise document that you can read over in just about 10 minutes. We've just released another one of those this morning to the VIPs. Go ahead and check that out. And again, if you want to take advantage of the bear market to learn TA, I have, with Miguel Crypto, fellow analyst and YouTuber here, created a trading course, a TA course. Not only do we just throw content at you, but we actually give you exercises to work through the content so you can learn it effectively. So that's called the Crypto Academy. Go ahead and check out both of those links in the description below. Let's get into the video. Lots to dissect here. First and foremost, what is Bitcoin doing? It's compressing between two critical points. 28.6k and 32.6k. Those are the two critical levels. Now, we've discussed this extensively in the past. If we end up losing 28.6k, which I think we will do sooner, well, not sooner rather than later, but eventually I think we'll do that. Whether we see a Deadcat bounce or not first is the real question. But eventually, yeah, I think we're in a bear market. I think we're going to lose 28.6k, and that would send us straight to 24k, which is the next major level of support determined by December 2020's price action. There's really nothing in between 28.6 and 24k. Again, if we lose 28.6, we're going to 24k, which is where the 200-week SMA will be, which is interesting. We'll look at that more in a second. But if we manage to break out to the upside above 32.6k, we will be zooming upwards and following a dead cat bounce scenario that we're going to look at in a second as well, right? So again, those are the critical levels, 28.6k and 32.6k, defined by the local range and also defined by the volume profile, which we've looked at quite extensively in the past. If we bring up the volume profile right now, we can see that 32.6k is the secondary POC on the volume profile. Massive amount of resistance in that region, and hence it will be a bit of a challenge to break above it. But if we do manage to do that, we will be sending, kind of skyrocketing upwards to a dead cat bounce price of roughly 38k. Again, we're going to look at that in a second here. But what I want to look at first, because I think it's slightly more important, is the fact that right now, we have identified a new downtrending line. Now, you can say that this was easily identifiable, and it certainly was, but I'm looking at it here for the first time today. And what we can see is it's actually downtrending, stemming from the from April 5th, the wick on April 5th, all the way through to the wick on the 21st of April, all the way through to the wick on the 4th of May. And if I wanted to, I could draw it a little bit better, but it's fine as it is. I think we'll just leave it like that. And what we can see is that now we have kind of a clearly identifiable point in which we need to make a move by, right? How am I determining that? Well, what I've said before, we're in a local range between 28.6k and 32.6k. And so now that we have a compressing line acting as resistance, in order for us to stay within this range, we're going to need to break up above that line at some point. And if we break above a critical resistance line, we're probably going to be jumping above it, right? So here's the scenario, right? Just to clarify this a little bit more. Here's the scenario. We can consolidate all the way up until at the maximum point, the 20th of June, right? And then we have to make a decision. We have to get rejected from this line and hence drop below the range, or we have to pump above this line and hence swing above the range most likely. So let me say that again. The most not the most likely, but we have to. It is compelled. Bitcoin is compelled to make a move before June 20th. We can further simplify this and we can further bring down that time frame by saying, well, as we said before, the 16th of June, let me get a vertical line out, is the interest rates decision, which usually brings volatility to the market. And then the 17th of June, which is just the day after that, is the options expiry, which again brings volatility in the market. And so we can actually say that before the 17th of June, before those two major events happen and within this compression line, Bitcoin will be making a move, or at least have the clear intention of making a move either up or down below 28.6k or 32.6k. So let me say that again. Before or probably by the 17th of June or on the 17th of June, Bitcoin will have made a move. This leaves us with 11 days, right? There is 11 days between now and the 17th of June, and by the 17th of June, which is the latest possible period of time Bitcoin can break out of this range, we will have made a decision, right? So, I know a lot of people are getting bored of this consolidation period now. I understand that. I'm bored of it too, I'm going to be perfectly honest. However, just know that within the next 11 days, this is 100% guaranteed unless something really ridiculous happens, be a defined break out of this range as per those two lines there, as per this downtrending resistance line. And additionally, and supporting that is the fact that we have the Bollinger Bands compressing massively, which just acts as supporting evidence that a big move is on the way, right? The market is all coiled up and it's ready to spring, either up or downwards. Now, again, do I really care which way it goes? Not at all. I have a plan for both scenarios, right? We break below 28.6k, we're going to 24k. I think that would be a little bit premature. I am personally leaning towards the scenario in which we see a dead cat bounce. I think that makes a lot more sense. We are on major support. We're consolidating on major support, which is bullish. And if we're moving into some later charts, like what we can see here, we do have a longer term descending wedge formation through which we probably are due for an upside retest. Now, this doesn't mean we need to break this out to the upside, okay? That's very important to note. But usually when you see a pattern like this, you see a swing from the bottom to the top, to the bottom, to the top, to the bottom, and we're waiting for that swing to the top of the wedge right now, which would be about 36k. And we've got bullish divergence playing out quite massively on the daily chart. And so this is the longer term descending wedge I was talking about to you guys earlier. Now, a lot of people would be like, oh, well, this is a reason to believe the bull market's back. Not necessarily, right? Because we could very well come to the top of the wedge and then reject down and go down even further for another swing to the bottom, which would take us to 24k, which, by the way, is where we're predicting the bear market bottom to be. So even within the parameters of this bullish descending wedge, we can still and probably will still go down lower to find the ultimate bear market bottom, right? That's very important to note. But due to the fact that we are yet to see another swing retest at the top of this wedge, I would be inclined to believe that it is slightly more likely that we swing to the upside here and see a dead cat bounce. The inverted hammer pattern that is printed on the weekly chart is another indicator that the dead cat bounce is probably more likely at this point as well. I'm going to look into what that dead cat bounce could look like in a second. Just bear with me. What we saw on Bitcoin here was 9 consecutive red weekly candle closes, which, by the way, was history made. We have never seen 9 red consecutive candle closes in the entire price history of Bitcoin. We've only actually seen 7, so this is 2 more than the historical record. And now, out of those 9 weekly candle closes that were red, which took us all the way, by the way, from 48k down to like 24k, which is crazy, right? We halved in valuation in that streak of red candles. We have seen, for the first time, a glimmer of hope here on Bitcoin in the form of an inverted hammer formation, which is a bullish candlestick formation, which kind of represents that, hey, the price moves up, yeah, it gets sold back down, but due to the wick being high, there's intention for the price to move higher, and it is proven to be possible for the bulls to take control here, and there's proven that there is buying pressure, and perhaps the selling pressure will slow down. When you see this on critical support, like we're seeing right now, 28.6k, it is a bullish reversal candle, and you would be expecting a dead cat bounce based on that. So moving forward even more, this is what that dead cat bounce could look like. Again, we've looked into what happens if we drop below. We know we're going to 24k. It's quite simple. If we break above, which I see is more likely at this point, this is what will be happening. But first, before we even get to that, we need to look at the trend. The trend is this, okay? In 2014, we did a very similar thing to we did in 2018. We're doing a very similar thing now, okay? We had a 5-step program, right? We formed an uptrending line. We lost the uptrending line. We consolidated on support below the uptrending line, which is here. And then we bounced back up and rejected from the green line, which is the 200-day SMA. And then we finally found the bear market bottom. 2018, exactly the same 5-step plan. We dropped below from the all-time high, formed an uptrending line, dropped below the uptrending line, bounced up, rejected off the 200-day, consolidated for a bit, and then finally found the bear market bottom. We are doing the same thing at this point, and if we do see a bounce above 32.6k, again, this is not confirmed unless we see that, but if we do see that, which we'll be finding out in the next 11 days, as we just established, we will be seeing a dead cat bounce on Bitcoin up to a 200-day SMA, which could probably be anywhere in like the 38k to 36k region, depending on how long it takes to get there, which, by the way, if it's 36k, lines up with the top of a descending wedge formation. And so I would be inclined to believe that, yes, we will be reaching 36k, not 38k, because we need to stay within the parameters of descending wedge formation, of course. And so let me just clarify again, if we break above 32.6k, we will have a dead cat bounce to that 36k region. We will reach the top of that dead cat bounce, most likely around, mid-July, right? So the middle of next month, we will reach the top of that dead cat bounce. And then from that point, we will most likely reject from a 200, go back down to this 28.6k region, consolidate for a little bit, and then drop down only to find the ultimate bear market bottom in around November, as per the 4-year cycle theory. Now, before we head into the rest of the video, I do want to quickly talk about the BitGet Exchange, and we'll jump back into this in a second. So the BitGet Exchange is one of my favorite exchanges. I'm not just saying that because I'm sponsored by them, by the way. I actually genuinely like it. I wouldn't take the sponsorship if I didn't. I personally use Binance and BitGet for futures, so Binance for spot and BitGet for futures, and that's the structure of my VIP trading course. So if you guys want to become a VIP, you're going to have to sign up to the BitGet Exchange, or it's highly recommended you do at least. Why would you sign up to the BitGet Exchange? Well, first and foremost, there's $4,000 in rewards to be claimed in the reward center by completing multiple tasks. Also, futures, half the price of Binance. Also, non-KYC, which means regardless of your country, you can sign up to this exchange and you can trade futures regardless of the regulations in your country as well. Also very good for tax reasons. So highly recommend you guys check out BitGet. You can sign up using my referral link in the pinned comment or the description below. But now let's jump back into Bitcoin, look at the 4-year cycle here. And what we can see is that as per the 4-year cycle, okay, and before we look into this too much, let's delete everything. All right, we'll look at the 4-year cycle in a second. The trend on Bitcoin, much easier to explain, is when we lose the 50-week SMA, the red line, we end up at the green line, which is a 200-week SMA. It happened in 2015, it happened in 2018, it happened during the COVID drop in 2020, and it's happened right now. We've lost the 50-week SMA, we're heading to the 200-week SMA. Now, whether we see a dead cat bounce or not to 36k, it doesn't matter. The ultimate goal is we're going to end up at that green line, the 200-week SMA, and potentially macro bottom on the 200-week SMA. We could go below it, depending on what happens in the recession. But that is a potential bottom for Bitcoin in terms of the macro scale. And until we break above, or unless we break above the 50-week SMA, right, we're still in a bear market. Because the trend is, as I said, break below the 50-week, we end up at 200. So as long as we're below the 50-week, the next step is the 200. So obviously the step you need to take to re-enter a bull market then is to break back above the 50-week. So if we break above 44k at this point, that would send us back into a bull market. Anything below 44k would be considered a bear market dead cat bounce for Bitcoin, right? Moving back into what the 4-year cycle is, and why it wouldn't necessarily make sense for us to see a drop right now, and why the dead cat bounce is slightly more likely, even according to the bearish scenario, is because the 4-year cycle, as per the date ranges here, predicts that the bottom will be in around November. So November, give or take a month. So realistically, October to December, but November is a good middle point, right? And so, if we drop down right now in the next 11 days, as per the daily chart, to, below 28.6k to 24k, it wouldn't really make much sense because we're still like 5 or 6 months until we're meant to bottom out on Bitcoin, 5 months. And so we need something in between to kind of kill the time. And that's why I think a dead cat bounce makes a lot more sense here as per the 4-year cycle theory. And that's why I think even if we see that bounce, we'll still remain bearish on Bitcoin. Now, I've established pretty clearly that I think, we're going to see a dead cat bounce. I think it's probably a 70% chance we see that dead cat bounce, a 30% chance we do not, and we drop down below. So it's more likely, in my opinion, and due to the objective data as well, that we do see a bounce in this region. We are a major support, makes sense. The only thing that's standing in the way of that, in my opinion, is the traditional markets movements. Now, bond yields are skyrocketing, and bond yields are indicative of what interest rates are going to do next, right? So bond yields have returned to levels we have not seen since June 2019. In June 2019, interest rates were all the way up here at 2.5%. Interest rates currently are at 1%, right? So it's a little bit confusing to me, because we have these clear trends in the TA that say, hey, we're probably going to see a dead cat bounce. But then we have interest rates and the traditional markets saying, hey, interest rates need to rise more, which is obviously bad for the traditional markets. And if the traditional markets go down, Bitcoin goes down. So interest rates, they are a longer term trend. They take place over long periods of time. It's bearish over a long period of time. But it is interesting to note that, interest rates will probably be rising in mid-June, and that options expiry might be bearish as well. So that's kind of counteracting the bullish TA we looked at a little bit. it's just something to keep in mind. But regardless, hope you enjoy the video, guys. Thanks for watching, and I'll catch you in the next one. Cheers.